Good evening, everybody. We're going on a little bit of a tangent here tonight. On March 2nd, I found out that it wasn't the 23rd. We're going to start, I want to say, fine-tuning our trade setups. And I'm calling this the 2+2 analysis, meaning if we can add something, if we can see a signal or a pattern and something else that kind of adds to the credibility or the probability of a trade, we're going to start moving toward that. Now, on March 2nd, we're going to be doing the training that everybody should be doing or reviewing or coming back from a previous time. And that's basically, we're taking the information that we already know built into candlestick signals and patterns, and then applying them to what creates the highest probabilities of those signals or patterns working, twofold, not only working in a positive direction, but in a very powerful positive direction. So we're going to be doing what I call the 2+2 analysis, adding things to the chart analysis that improves the probabilities of a signal or a pattern. All right, so let's first of all, we'll go through the market overall. We can see there's some consolidation, not anything severe. Seems that when they came up through the 200, the Dow right now is trying to support on the 200. The NASDAQ supporting on the T-line, still in an upward trend. Let me make these a little bit smaller. With the anticipation that if they start trading this positive tomorrow, we're still going to be in that slow uptrend that brings us up to the 200-day moving average. Doesn't matter what the magnitude of the move is on the indexes. As long as the indexes keep moving up in a slow direction, that allows us to take advantage of the chart patterns that are not only going to be moving up, but moving up with a little bit more energy, or not a little bit more, but a lot more energy than just your regular charts. The most compelling chart today obviously was the transportation index, consolidating, and this is why we want to have our eyes kind of naturally analyze what type of buying and selling is going on. Uptrend, 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 consolidation, doji, hammer. What's that tell us? Well, just the fact that they're indecisive pullbacks should be the first thing that crosses our mind. But this is an indecisive pullback, and today that bullish trading kind of revealed that the selling wasn't very strong. The uptrend's in progress. Now, if the uptrend is in progress on the Dow or on the Dow transports, that any selling in the Dow is probably just kind of consolidation, not really hard selling. I'm going to take a look at a couple things real quick. Crude oil. Crude oil also kind of has the, indication that they've come back, tested the 50. If they slowly continue up, or the crude oil continues up, that means a lot of the stocks that are setting up, like Whiting or Bass, start looking to see if they start moving up pretty strong. Okay, so here we're going to go into, let's take a look at, let's see. Gold may be done in that contract. Uh, Soybeans, nothing. So when I say nothing, there's going to be times where you look at a chart and you can pretty much tell which direction it's moving. Now, looking at this chart real quickly, what's the first thing that should be standing out? Pretty much, you're kind of in a wedge formation, which means it's really not going anywhere until it breaks out. So you don't want to be trading it. Stan, the transports are not as crucial as, let's say, the Dow or the NASDAQ. But it's an indicator that's kind of a precursor to what the overall market will be doing. Obviously, on a macro sense, that if the transports are acting strong, that means everybody's expecting the economy to pick up better, which means they're going to need more transportation for shipping people or shipping goods. So the other criteria is if you see a strong uptrend in the transportation, you see a slow uptrend in the NASDAQ, and you see a little bit of selling in the Dow, what is your general assessment? Well, they're not selling the market. They're buying and selling different sectors, which means overall the market trend is still going to be kind of moving in the same direction. There really isn't any major change of investor sentiment. So if I see that, I know that, yeah, there's consolidating in the markets, not really buying or selling. Gold itself is just kind of, let's see, I don't know whether that's the right contract. That's the right contract. I haven't been trading gold. There's the April contract. Uptrend with pullbacks, not really selling off with any great urgency. Okay, so 3 weekends from now, 3 weekends from now, March 2nd, we're going to be spending a full day, again, our 4-hour training that usually lasts 7 hours, on the top rank signals and patterns, and I'm going to be adding the 2+2 to that analysis. So here's what a 2+2 is. Our recommendation today on FET was based upon the fact that there was a kicker type signal. Now obviously the strongest individual signal of the individual candlestick signals is the kicker signal. So that's your first criteria. Now look what the rest of the chart is telling you. Fry pan bottom and a kicker signal up through the resistance level of the 50. That's telling you a lot of information right there. 2+2 is, first of all, the 2, knowing that that's a strong signal, add 2 to that you're got a fry pan bottom breakout through the 50. That's giving you that much more information that's going to be a positive trade. Kicker signal on Coty. Notice how they gapped it way up. What can we expect off of that strong price move? At least a 45 degree. Our recommendation last week on the USFD was based upon the kicker type signal. And notice even though we had a down day on Friday, what type of signal was that? Sound is on and off. Is that me? Is everybody getting intermittent sound? Jim, how can they fix their sound? Yeah, that's not a signal. That's just a down day in an uptrend. So you definitely want to make sure that's going to close below the T line to tell you there's hard selling. Otherwise, you just consider it a down day in an uptrend. So we've got a few trades, quite a few trades, that are based upon patterns, a pattern breakout, a pullback. Now, what can we expect knowing what the nature of these signals were? Kind of an inverted hammer doji, a doji, bullish confirmation. What's that setting up for? A J-hook pattern. Now, why is this a more compelling J-hook pattern than just a J-hook pattern? Because we can see exactly where the buying has occurred, right on our T line. That adds that much more 2 plus 2. There's our 2 telling us that we got a J-hook pattern setting up, and then we can add another 2 to it based upon where that setup is occurring. Fry pan bottom. Where's our breakout? Right about there. What's more compelling about this fry pan bottom? It's hugging right along the T line. This gives you that much more confidence that it's working in the right direction. So when we recommended SE today, it was based upon kind of indecisive pullback. And where did they pull back to? Right smack dab to the T line, morning star signal. If they opened positive, what was it doing? It's telling us the morning star signal was supporting at the T line, and we've got the prospects of a J-hook pattern setting up. This is what we really like to be caught in, is a steady eddy. This is where I don't know. Let's see. Are the indexes? Yeah, you don't pay attention. Right now, it looks like the Dow is up 48 points. And no, I don't even care to analyze what the reason is, number one. And number two, I don't even pay attention to what the indexes are doing tonight. Unless, for some reason, they were up 400 points on the Dow. That tells you something was happening out there that we should take a look at. The fact that they were up 48 points, that's just trading. The pre-market futures don't really mean a whole heck of a lot until probably about 10, 15, 20 minutes before the market opens. That's what everybody's making their decisions on before the market opens. Now, we did Monroe. This is, again, 2 plus 2. The bigger the signal, the more compelling there's been a reversal. A doji sandwich through the 50. Kind of a fry pan rounding bottom. So you've got a big, huge hammer, a doji sandwich. There's 2 plus 2. That puts you in the right direction. Now, how long do we hang on to this? So you see a sell signal and a close below the T line. What's telling us there's good strength in this uptrend? Look where they bring the lows each day, right back to the T line. Now, for those of you new folks in here, the relevancy of that statement, right back to the T line, means a lot more valuable information than you can imagine, because nobody has the T line on their charts, or statistically, it's nobody. Which means every time it comes back down to this level and bounces back up, it's not doing it because everybody has that indicator or that support level on their chart. It's doing it because that's where there seems to be a natural support and resistance level. We just categorize it by being able to put the 8 exponential on there to give us that natural support and resistance level. So when I say it comes back and it tests the T line, that is a much stronger statement in the fact that nobody has the T line on their chart. It's hitting that natural support level. MRTX, look at our scoop pattern right here, right off the T-line. IQ, these are all positions we've got in portfolios right now. You can see where the bobble breakout occurred. You can see the piercing signal from yesterday or from Friday. So if you did hang on to this, it had to close above the T-line to stay in it. You still got the prospect of it being above or staying above the T-line in an uptrend. We've got a few of the biggies like blue. Same scenario. Look at your morning star signal occurring right smack dab off the T-line. If this starts trading positive, where do you think the likely prospect target is? You could probably draw a line right through the tops, right up here to the 200-day moving average. ALGN, kind of the same scenario. Notice what they couldn't do on Friday. They couldn't close it below the T-line. You've got this little J-hook pattern setting up. Now, the reason this is a good-looking chart, humbug, is, well, for crying out loud. Try to make this small. Not that small. You can see there's a gap over here. You can see right in this level, got a resistance level. Now they're coming back up. If they go through this resistance level, you're in the gap area, making the next target the 200. Why would the 200 be relevant? Because look what they did here at the 50. When they broke through, they basically used the 50 as a support to create a huge left-right combo, now a J-hook pattern. And then another one that's been a nice steady eddy. You had kind of a morning star signal, and then there's your little kicker signal off the 50. So what's our criteria? You can stay long until you see a sell signal, unless you start getting too far away from the T-line. Just have safety stops up here. But so far, we've got some very good profits in this one. VIPS is kind of running out of steam, except it's doing a little almost morning star type signal. That if they open this positive, where do you think the next likely target's going to be? You can draw a line right through the top here, heading up for the 200-day moving average. Aqua, there's your fry pan bottom. There's your doji. Now, this makes this trade up here, let me make this smaller so you can see the whole picture. Well, for crying out loud, it just makes you want to kick your grandmother. You can see the fry pan bottom. You can see if they break out, there's a gap area up here. So we're definitely do not want to see it trade back below. I mean, this becomes your simple trading rules. If you see a doji in the overbought condition, put your safety stop just below today's low. If it comes down through there, it's going in the wrong direction. If it starts trading positive, you know you've got that potential of coming up here and hitting the 200-day moving average. And Crone started out nice the other day, but this is where this is where selling a position quickly becomes prudent. If this was your bullish engulfing, what should we see the next day? Bullish confirmation. What did we see the next day? A dark cloud. That told us that this had to open positive and trade positive today to stay in it. If this opens lower, or you should have been out today waiting for the next buy signal, and or if you're still in it, if it opens lower, close out the position. What we're looking for is the classic, the fry pan bottom, J-hook pattern. But so far, we don't have anything telling us the J-hook pattern. It kind of broke we were looking for this to happen, looking for this J-hook. So Probably want to be out of it. Yeah, Richard, Jim's ready to help you. Okay, those are the ones that we own. Now let's take a look at the biggies just to get a feel for what's going on. Nugget, still kind of consolidating. Nothing in the gold stocks right now yet. Tesla. Tesla is starting to show some signs, but remember, this is a weak signal. Even though it's trading positive, traded at the low end of the range, gives you a very clear trading strategy. If this opens lower tomorrow and you're long, you close it out. That tells you you're sideways. If it opens positive, you stay long and just don't let it close back below the T line. Labu is a good way to see what the biotechs are doing. Which in this case tells us we're in a very slow, steady uptrend. Now that's not necessarily a bad indicator. That tells me, all right, if I see something strong as far as a biotech stock, and I see that the whole index is kind of slowly moving up, that means my strength in that that sector is remaining strong. That means that individual stock is trading strong. When a stock is in an uptrend, can one buy safely on every pullback? No, not necessarily. Because we never know how long that pullback is going to last. I would rather, if I see a pullback, like something like this, after a strong buy signal, that's when I'll go to my 10-minute chart and see if after they've done selling it, whether they come back up, then you can start buying. Wouldn't you have gotten out after last week's bearish best friend? On which one? On this one? Yes. On Labu, you would have been out of it. And what would that have told you as far as this trajectory? It's not very strong. It's probably at best it's moving sideways. Is there a large bullish engulfing candle like Crone and then for 3 or 4 days stock meanders, never going above the high of the engulfing candle? Is the power of the signal gone? How many periods might be effective if no other negatives? Steve, not anything set in stone. I'm trying to think of one right now. Let's say, for example, a breakout like this on Aqua, and it goes sideways for 4 or 5 days. If it went sideways tomorrow, I'd close out the position. Because what did that tell us about the strength of the breakout? Just not there. Again, we're not trying to anticipate that there is going to be strength. We're seeing what the actual strength is. So this is where a lot of times I'll just close out the position. Then if I see another strong buy signal, that tells me the bulls are still in control. I can buy back. If I miss out on 47 cents or 68 cents, it's not because I'm trying to make 68 cents. I'm trying not to give back profits. I'd rather miss out on some potential profit, but still have a higher probability that the uptrend is now back in progress. If it breaks the engulfing candle to the downside, then the engulfing, yes. And I usually use the halfway point of if this was my breakout candle or if this was my bullish candle and it closed more than halfway down, I'm closing it out, waiting for the next buy signal. Otherwise, if I didn't, even though it didn't close below the T line, look how many days I've wasted with that money where I could have been someplace else finding something like this going on. So here's, I guess, the rhetorical question that you should always be asking yourself every time you look at a chart. Let's say you were long, and it broke out. What should you be expecting? And that should be that should be the reoccurring question in the back of your mind. What should we be expecting based upon a breakout? Well, if we're not seeing what we're expecting, close it out, move on to something else. Yeah, we're expecting a more upside. Jim, we're not expecting a pullback. We're expecting that if this was a bullish breakout, we should have more move to the upside. I've moved United Technologies over into what I call the biggies, just because of the price. And so right now, United Technologies, ever since the bobble breakout, and again, this is where you have 2 plus 2. First of all, we know we have a bobble breakout right here at the 50. But our first 2 was a doji hammer gap up, best friend. And where did it occur? Right here at the breakout level. Does it usually pull back after a breakout? Not necessarily. As a matter of fact, I don't want to see it pull back after a breakout. Because what do we expect after we see a breakout? We expect the bulls to be in control. If the bears are able to knock it down and without bringing it back up in that same candle, what's it telling us about the strength of the bulls? They aren't there. You don't want to be in that trade. Should we buy it breakout? You can, yes. If I was looking at this chart, let's see if I can do this. Right here, and I'm thinking to myself, all right, got a doji, we got the potential of a bobble breakout. And the next day, I see them gap it up and trading here. Yes, I can be buying it. So I will buy on, and that's going to be part of our training 2 weeks from now. Is what are the setups that tell us that we have an extremely high probability to be buying on the open the next day without having to wait for further confirmation? A lot of times that's going to be a doji sandwich. If I see something like this and it opens positive the next day, I'm buying immediately because I know the probabilities are pretty strong that we're going to be in an uptrend. Texas Instruments. There's a scenario right there that kind of shows that example. We've kind of had a bobble breakout. We're setting up for another bobble type breakout. And we did a doji today, which makes this very simple. If this opens positive tomorrow, what do we got the prospects of? A piercing signal, smack dab on the T-line, a doji right on the 200, a positive open, doji sandwich breakout. We want to be buying immediately. Yep, doji sandwich. Now, that's also going to be a function of that when we wake up tomorrow, it looks like the pre-market futures are showing that the whole market is going to be opening up at least flat or a little bit positive. And this one's opening positive. That just gives us that much more probabilities that a doji sandwich breakout is occurring. What are the other moving averages besides 8? The red is the 200. The blue is the 50. Those are simple moving averages. That's a reading. Mike, I'll get to your question. The reason we have those, a lot of people say, well, why don't you use the exponential? Aren't they better? We're not using them to make our decisions. We're using these to watch what every major money manager around the world uses to make their decisions, as a 50 and the 200. This is the 34 exponential. It works reasonably well. And then this little green line is what we call the 3T line, which works much more effectively when you start moving away from the T line. The 3T line becomes a much faster much faster indicator. Wouldn't you wait till Thursday after NVIDIA reported? No, we're not buying NVIDIA. For all we know, Texas Instruments by Thursday might be trading up here. If the market opens lower, you still buy? Not necessarily. If we see the pre-market futures are showing the Dow is going to open up down 60 points and Texas Instruments opens slightly positive, we don't need to rush in. We can wait to see whether the Dow stops its downtrend and comes back up, or we wait to see whether they lollygag this a little bit, or if they start buying immediately, even though the market's opening lower, then you can start coming in. But just because it opens positive, if the market's opening lower, just kind of wait a few minutes, see what happens. Is FET a buy? It's probably a buy, but it was up 14% or something today. So what you want to do is think, all right, it's obviously a higher risk now because it's moved up so much. But what is your training that you should be getting from this chart? That if you see a chart that looks like this, we know the kicker type signal tells us if they start trading positive, we want to be buying. I don't know whether I've got some more. I'll take a look. But a kicker signal obviously is wouldn't you check the pre-market for the index that the Texas? Well, I'm assuming that if the Dow opens lower, that the Nasdaq, let's say the markets are opening lower. The Dow's opening down 60, the Nasdaq's opening down 15. I wouldn't jump in. Yeah, Walter, with it moving up that much, what you'll probably see over the next couple of days is maybe a couple of days of consolidation where it kind of moves sideways, allowing the T-line to catch up a little bit. I wouldn't think it. No, just because it's moving up doesn't necessarily mean it's going to move back to the T-line. It might move up like this, giving the T-line some more time to catch up. Do you consider the pre-market near the open reliable for planning? Yes. Obviously, if we're ready to buy and tomorrow the pre-market futures show the Dow's opening up down 140 points, that's not going to be a good market to be buying. On the other hand, if we wake up and we see the pre-market futures are showing the Dow is going to open up 90 points and the stock that we're looking at is opening positive, we're going to probably move a lot quicker knowing that the market is moving in the right direction that we think, or it's not selling off, and the stock that we're thinking about is moving in the right direction. We would do an entry. I mean, there's 4 quadrants for entering trades. Very simply, if the market opens positive and your stock opens lower, you don't jump in. But if the stock starts moving positive back up above where it opened, that's going to start creating another green candle. That just told you they opened it lower and the buyers are still there, then you can be buying. If the market opens lower and your stock opens higher, you just kind of wait a little bit to see what happens. If the market opens higher and your stock opens higher, you probably within the first 30 to 90 seconds, you probably want to start buying. And if the market's opening lower and your stock is opening lower, probably says, this is not a good time to be buying. Let's just sit back and wait. What do you think about level 3? Level 3 is okay if you're doing fast trading, meaning day trading. You want to see exactly what the bidders and what the volume on the bid side, what the volume's on the ask side. But I usually just look at the charts and see what they're telling me. SP, no, I look at all 3 of them. You can look at the Dow, or I mean, obviously, if you're looking at the pre-market futures on your, say on the screen of Fox News or CNBC, they're showing you the Dow futures are opening up 60 points, the S&P is opening up 4 points, the Nasdaq's opening up 12 points. So you pretty much can see that the whole market in general is opening positive. Then there's going to be days where you see the Dow's opening down 40 points, but the Nasdaq's opening up 20 points. Well, that gives you a little bit more indication that the stocks that are traded on over the counter are probably still acting strong, whereas the big stocks may be opening weaker. And you can throw the S&P in there, but usually the S&P and the Dow kind of work in conjunction with each other, and the Nasdaq and the Russell work in conjunction with each other. Okay, let's, where were we? Amazon. This is why you want to be able to take a look at a chart and analyze what it's doing. So the rhetorical question is, which way do you think Amazon is moving right now? It's just moving sideways. So what's that tell you about where you want to put your money? Well, probably not in Amazon. There's probably better charts out there someplace that look more like this, that you have a much stronger feel. Did everybody lose sound? You like metastock charts? Jim, metastock charts are better for scanning, and they're more clear. Thinkorswim has good charts, but usually I just have them set up next to the trade that I'm doing. But I'm actually analyzing that trade off of either metastock or Thinkorswim. Amazon could be forming a dumpling top, but you need something severe because you're getting down toward the oversold area. Now, remember what happens at the breakout? Usually the breakout's going to occur on a dumpling top when the stochastics are in the oversold area, just like the breakout on a fry pan bottom is usually going to occur when the stochastics are in the overbought area. All right, I don't know what, I've punched buttons here. Okay. So that's Amazon. Netflix. Can't really tell which way Netflix wants to go. You're kind of sitting in a sideways mode. So which way would you be trading Netflix? Well, if you can't tell which way it's going, trade something else for right now. That doesn't mean that in 3 days from now, you're not going to be trading Netflix once you get a better feel for what the chart is telling you. Same scenario on Apple. Apple looks like it's trying to set up for a J-hook, but today was not a very compelling chart. And NVIDIA, another one. You just can't tell which way it's going, so not trading NVIDIA at all. Netflix, a cup and handle. Slightly. But I probably wouldn't pay attention to Netflix until it came up through this level. Because for all we know right now, it's stuck in a sideways. And probably a little trend in that direction. A wedge type. How do I get? And Roku. Roku was setting up. You can see the bullish engulfing right here on the T line at the 200. So what did we need? What did we need to see today? We need to see it open positive and trade positive. The fact that it opened and started trading down told us, we don't want to do anything yet, not until we see some strength. Do you have a spot where we can go to look at what you call the portfolio stocks that you reviewed in the beginning. That would be a convenient way for us. Well, SP, that's exactly what we do in these sessions. Now, you can go back through and see what was recommended. So today we recommended 3 things, and it's still you want to apply your entry and exit criteria. For example, with the kicker signal on FET, what did we want to see today to confirm the kicker signal? We wanted to see bullish trading. SE, Morningstar signal J-hook pattern. What do we want to see today? We want to see bullish trading. We also recommended WPM. But what did we want to see on WPM for it to be a viable trade? Positive trading. The fact that it opened down here, what that tells us we wanted to do with this trade? Nothing. There wasn't anything there. Does the fact that the market has an overnight rest period result in a stronger or more believable trading direction signal at the open than if the market traded without a break as something like the Forex? In other words, what does the break in the market activity overnight solidify sentiment on the open as traders have had a chance to reflect on conditions? Can one cue off the open or the day's direction with greater confidence because of overnight break? I hope this question makes some sense and doesn't sound stupid. No, Bruce, nothing is stupid in here. Just the fact you must have been typing for a half an hour. No. Remember what we're looking at on the charts. We're looking at investor sentiment. And the reason that there's a open and a close is because there's a time frame. What happens over the next 12 hours has nothing to do with investor sentiment at the close of today. So if the Dow is currently trading up here after hours, that means absolutely nothing because the market's not open. If it opens down here, that told you at some point during the night, investor sentiment changed. So we're not reflecting on what investor sentiment was at the close of one day and the open of the next day. We're looking more to see what is the investor sentiment 12 hours or whatever it is, 15 hours after the previous day's close. So all we're doing is seeing exactly what the investor sentiment is on the open the next day, which has nothing to do with what the close was that day. Because you could have any stock, and I'm just going to pick out one. Oh, let's see if I can figure out another one. You can have a stock that is doing great guns. The next day somebody comes out with a downgrade. Well, that's going to change investor sentiment. So whatever was going on in the close of the previous day has nothing to do with what investor sentiment is on the open of the next day. XPE shows dark cloud, and if so, the target down the side. Want to hang on to these? Yes, that was based upon where do most people buy. Let's see, you want to hold off on your individual ones until after I tell Jim to do the double line. But I will use this one to show a good example. This is where knowing what's happening in investor sentiment is a huge advantage to the candlestick investor. The number one simple analysis of the Japanese rice traders have provided for us is Where do most people sell? They panic sell at the bottom. Where do most people buy? They buy exuberantly at the top. Now, what do we classify as exuberance? In an uptrend, you're in an uptrend, you're in an uptrend, you're in the overbought condition, and they gap it up. What are the two aspects that we know to start looking for profit taking? One, they're gapping it up in an overbought condition. We've got a very simple logic rule that if you see a gap up in the overbought condition, start looking for profit taking. And two, the further away you move from the T line, the higher the probability it's going to come back and test it. So this is what kind of, I want to say, has made me a lot of money and saved me a lot of money. If I happened to be in a profitable trade, which very rarely I was before Candlesticks came along, that if I happened to be in this trade and they gapped it way up here and I'm thinking, oh man, I'm going to get rich. Instead of thinking, all right, we're way up in the overbought condition. What's happening up here? Usually the smart money is starting to take profits. So if I see a gap up that far away from the T line, I'm taking off at least half my position up here somewhere. If they continue to take it down, I'm taking off the other half. Because if they're selling off right now, what's that tell me? That was exhaustion up there at the top. Possible agreement reached to avoid shutdown rally tomorrow. Could be. But remember, a shutdown is not going to affect the market. Meaning, it's not going to affect it's not going to affect the what I want to say, the economics of businesses. To further finish your question, Mike, I would first watch to see what happens once they get here to the T line. When you have a good bullish buy candle, next day, if it opens positive and moves up, but then the bears pull back down like an inverted hammer, what do you do? Close it. Right here. Right here was a nice, big, bullish engulfing day. So I was buying some calls up here. But look what happened by the end of the day. It was back down here, not doing any bullish signal, closing just below the T line. I closed out the trade. Why? Because that now does not enthrall itself as being a bullish pattern. Now this is why we recommended this in the options room last night, because notice what signal we have right here. We've got a left-right combo closing above the T line. That told us we should be buying on positive trading today. Why? Because we know the left-right combo is one of your strongest reversal signals. Okay. So, I don't know why was I doing it. Oh, so back here, if I'm buying based upon strength, and it closes down here, I'm closing it out. If I'm buying here because of strength, and it comes back down through where it opened, if they're coming back down through there where the bulls were starting to buy, what do I want to do? I'm going to get back out because that tells me the bears are still in control. Close out the position. Now, this is all a function of learning how to cut your losses short and let your profits run. If you're buying based upon a perceived reversal signal and that reversal signal fails, close it out. If you put into your mind, which took me years to finally realize, that probably 1/3 of my trades aren't going to work, that seems like a lot. But if you cut your losses on 1/3 of your trades, that's giving you more opportunity to go find something where the probabilities are in your favor. Okay. So these are the 2+2 type setups. Fry pan bottom, breakout, right here at the 50. What's that tell me my prospects are? Probably that much better that I want to be buying on positive trading. Kind of a morning star type signal and a breakout and a fry pan bottom. Just things that we can apply that improve the probabilities. There's our bobble breakout. So what do we want to do on this one? If this opens positive tomorrow, what's this telling us right here? Lots of profit taking, but it was a gap up through a resistance level. If they open this positive tomorrow, what can we imply about the profit taking? Profit taking's over. That strength of this signal is still in progress. Oh, let's see. I hope this is. MRKR. Look at our setup. Inverted hammer, doji, inverted hammer, bullish confirmation of an inverted hammer, and we're closing right here on the 200. If it opens positive, what's it telling us? Got a slow curve, bullish candle, bullish signal, and a breakout of the resistance level. Look for another move of, the same magnitude over here. Let's see. Okay. Yeah, I'm just watching that too. Are you buying the stock on these or an option? Depends on what you want to be doing, John. If you're a stock buyer, you buy the stock. Now, usually on a $5 or $6 stock, I'm usually buying the stock. If this was a $65 stock, I'd probably be more up to be buying the option. Flex, kind of a 2+2. You can see the J-hook pattern setting up right off the T-line. NVTA, you can see kind of the little doji bullish confirmation breakout. Wave 1, wave 2, starting wave 3. Again, 2+2, just a higher probability that breaking this little downtrending channel is putting us into the next wave. And we had that on something. Was it WPM? WPM had that same type of situation. So as it broke through this level right here, put us into the next wave to the upside. Now, the reason we're showing all these different scenarios is more than likely this is too many for most people to handle. What we're trying to do is expose people to different setups to show where the high probability setups are, so that instead of trying to learn all 15, 16, 18, or whatever we've got in our inventory of high probability trade setups, you learn 3 or 4, just master those. If you learn 3 or 4, you're going to always have more trades than you can handle. How long an option duration? It all depends. If I think we're near the top of the market and I see something that's going to do a quick move, I might buy options that are 2 weeks out. If I think I've got to buy something because it's a steady eddy, maybe I go to 3 to 4 weeks out. Okay. What did I do? So notice you had a bullish engulfing right smack dab on the support level of the 50. And you've got a fry pan bottom. That puts you in a situation where your probabilities are going to be that much better. I'll see if I can find a left-right for you. Again, there's your morning star signal. There's 2. What's the other 2? Look where the morning star signal is occurring, right smack dab on the 50. So if this opens positive tomorrow, what type of pattern do you have? Well, your doji sandwich after a morning star signal, or a morning sandwich, your McMuffin, an extremely high probability trade setup. How far back could you consider resistance? Oh, resistance is anything you can see somebody else looking at to see if they that might be resistance. It could be resistance here. It could be a downtrending resistance, drawing a line, just whatever anybody else can see as being a resistance level. Now, a lot of people say, well, there's a resistance level from 6 months ago. I'm not interested in what happened 6 months ago. I'm interested in what's happening right now. Because that's what the investor sentiment is telling me is happening right now. So again, 2 plus 2. Kind of a fry pan bottom, support right smack dab on the 50. What's our price movement analysis? When they go through a resistance level, they come back and usually test it as test it as support. If it acts as support, that means there's a lot more upside, a lot of investor confidence at that level. This is what we're looking for. What happens at breakout levels? Notice your scoop type pattern. Notice where it bounced off the 50, held the T-line. This allows you to identify. So this kind of, knowing what the pattern is and where it's breaking out, kind of, let's say, alleviates the fear that, well, we're in the overbought area. But if they break out through this resistance level, what do you think everybody and their brother is watching? They're watching to see what happens at this resistance level. We can see that it's setting up kind of a scoop pattern ready to break out. Mo, you can always do that. This could be a 5-minute chart if you wouldn't have the gaps. But remember, candlestick signals candlestick signals are the cumulative buying and selling of investor sentiment during any specific time frame. John, these charts are daily, but they could be a 10-minute chart, an hourly chart, whatever time you want to trade. They could be a monthly chart, whatever your time frame is that you're trading. If I'm trading futures, I'm usually trading off the 10-minute chart. Futures meaning soybeans, cattle, hogs, gold, that type of thing. I'm trading off the 10-minute chart, and then my entry strategy is more refined by dropping down to the 5-minute and then the 1-minute. But notice your best friend signal on Chipotle. Look at the pullback, very indecisive. Yes, the 50, this chart would be exactly the same. It is exactly the same. I could do this. This is the daily chart. If I move it to the 10-minute chart, you have all the same parameters on here. They just happen to be different places. So there was your buy. If you were day trading Chipotle, you stayed long, stayed long, stayed long. Yep, you took your profits right in here. Then you could think about getting back in over here. That was Chipotle. ARWR. Big bullish engulfing signal. I hate when I do that. And notice where this became relevant. Right down through this resistance level. So you stay long on this one. EGAN. Kind of your best friend. Look for a 45-degree off of here. DLKS. That's not what I wanted to do. DLAB. Big bullish engulfing. And where did this occur? Right smack dab off the 50. Where do you think your next target could likely be? Up here at the 200-day moving average. Is that a belt hold on ARWR? No. Remember, that's just a big bullish engulfing signal. Where were the belt holds? We had a couple good belt holds here in the last few days. I can't remember which ones they are. Maybe I've got them on here. Yogi, you can see, is in an uptrend, and it did a morning star signal. So this one's being bought based upon the high probability 2+2 morning star signal, bounce off the 50, close above the T line. Where do you think your next target should be? Probably back up here in this range, which would give you a good 20% upside. All right, Mike. Let's see. ILMN. No belt hold there. Grub. That is a belt hold, yes. The fact that they gapped it way down here and brought it back up. UNVR. Yes, that is a good belt hold. So what happens on a belt hold? Well, look at the 2+2 here. Look where the belt hold opened, right smack dab on the 50 and came right back up. What happens in a belt hold? They wiped out a lot of sellers, but the bulls were still the overpowering force. Now they're back up here and they've wiped out a lot of sellers, so any buying is not going to run into as much selling resistance. Another belt hold. Where would you buy this one? Came back up through this level. That told you that they've wiped out a lot of sellers, some profit taking. Get ready for the next move to the upside. All right, there's your bobble breakout on Cala. Failed up here, came back. Notice the one criteria couldn't get past. They couldn't close this below the T line. Now they've broken out through the 200. And we just did UNVR and XEO. There's a belt hold on NXEO. Means there's not as much selling resistance in front of you anymore. AAXN, notice the pullback. This is what we call a methods rising. Big bullish candle, indecisive, indecisive, indecisive. Notice the one thing they couldn't do. They couldn't close back below the candle that told you the bulls were in control. That told you when the bears kept trying to knock it down, they couldn't knock it down. The bulls finally said, they're not going to be able to knock this down. They stepped back in. That's usually a continuation pattern. Yes. A belt hold is that, they are pushing, one guy's trying to back out of the ring. The other one grabs his belt and pulls him back in, and they're back to fighting again. Tiva, morning star signal. Right smack dab at the support level after going through. That means if they start coming up above the T line, there's your 2+2, a morning star signal right smack dab on a major support level. Methods rising. Big bullish candle, indecisive pullback, and then continuation. It's called a methods rising. Now, in the books that I've written, all 50 or 60 signals are in there. Now, we tell people to concentrate on the 12 major signals because the other 50 or 60 are not going to occur often enough to spend a lot of mental time and energy. But what I do tell people to do is maybe once a month, just kind of browse through all the signals and patterns, just so you can recognize them, that if you happen to see something like this, you may not recognize the name or remember the name, but you say, oh, if this is some sort of signal, go back and look for it, and then you'll get a little bit more better definition. You have a video that has all your methodologies. Oh, Jim, I don't know what all my methodologies are. But yes, we've got, in the members area, you can go to products and services. We've got training videos on everything, your entry and exit strategies, your scanning techniques, your setting your stop losses, your taking profits. In every aspect that you can think of investing, candlestick analysis is not a formulated, step-by-step situation. Candlestick analysis is mere common sense put into a graphic depiction. So everything you look at in our training, now you can either go back and buy the trainings, which are discounted obviously to the members, but eventually we will be getting to all of them, where on a Wednesday night we might do scanning or say option strategies such as the credit spread or the debit spread, or we may take a specific pattern like the doji sandwich and concentrate on it. So we eventually go through all of them, but if you want to go a lot faster, it's always better to have the videos where you can, anytime you want to confirm something, you can go right to your own video. So once you buy them, they're on your site for good after that. So here's another Bobble breakout on CSII. A Bobble breakout J-hook pattern tells us our probabilities of another wave of this magnitude is about ready to occur. PETQ. There again, there's your Morningstar signal closing right on the T-line. If it opens positive, where do you think your next target is? The top of this trend channel. ADAP. Slow curve. Bullish engulfing signal followed by a doji. If this opens positive, what do you got? A 2 plus 2. You got a doji sandwich breakout of a slow curve at the 50. Mo, once you start seeing the patterns, remember, the reason we're looking at patterns in the first place is because investor sentiment works the same way time after time. All we're doing is learning what those specific patterns are and what the results are. Now, the advantage of a pattern and signal versus just identifying an uptrending stock is that usually a pattern is going to produce much stronger results as far as profitability in the same time frame. Also, it's going to probably give you much higher probabilities of those results. So there's a left-right combo after a long hammer signal, hammer doji. If this opens positive, where do you think your next likely target's going to be? At least up here, which would kind of coincide with here. And if it breaks out through there, probably heading for the 200-day moving average also. Now, when I say you're heading for the 200-day moving average, that's on the basis that if the market just kind of stays consistent, the individual results of a breakout without any major market change is pretty strong, knowing what should happen coming out of a pattern. So there's a left-right combo, a gap up, going toward your breakout. If this starts trading positive, what's your next expectation? Another move of the same magnitude as this. So if you're an option trader and you see this open positive, now you can figure out different strategies. For example, if this is a That about a 35-point move. That takes you up to about 190. You might pick out different strategies, not necessarily buying calls, but a safer trade might be that you buy a 155, sell a 160, or buy a 160 and sell a 165. It might make a lot more sense where you can make, I'm going to just pick out a number, 350% on your trade by doing a spread and eliminate or reduce the magnitude of the move versus buying calls outright where you might have to move all the way up here to make 350%. So those are different math setups that we do as far as training, kind of reduce your exposure but maximize your profitability on much smaller moves. Again, there's a Bible breakout on TAL. I have your book on high profit candlestick patterns. I've read it cover to cover 4 times. Great book. Do you have one that includes the use of the T-line? Larry, I don't know. The next book was a Candlestick Trading, Eliminating Emotions. I'm not sure if we've got the T-line in there or not. However, it doesn't matter. The T-line isn't a very extensive learning process. All you have to do is put it on your chart and then listen each day or each time we do this. You'll see how effective the T-line is. So the number one important aspect of candlestick analysis is recognizing when a pattern is setting up. Notice on EXPI, a series of dojis followed by a left-right combo started our next up move. Notice what's happening right now. Bunches of dojis. If you see a strong move on this one, you want to be buying because that tells you your next move is in progress. So anytime you see a trade setup, look at HABT right now. Series of dojis and a bullish confirmation. You can think about buying this one based upon the series of dojis and kind of a scoop type pattern. But what did this series of dojis represent? A lot of indecision. And what does a bullish candle coming out of that area tell you? It told you which way they've taken that indecision. Uh, 1233, yes, on the stochastic. This one looks better for some reason. But I would still look at this one. If this came up through there, look, you got kind of a little, this is Planet Fitness. We're contributing to that. We spend $10 a month, so Sandy can go there. And in the last 6 months, 8 months that we've been paying, she hasn't been there yet. But here's another one that's bouncing right off. This is MMSI, bouncing right off the 50 after it came up through, making your upside. What is a 2 plus 2? It's just taking something that you can add everything up. Obviously, 2 plus 2 is 4, which is, we've got a kicker signal. That's a strong signal. Now, if you can add the fact that it did a fry pan bottom breakout at the 50, 2 plus 2 is, yes, kind of a convergence signals that you're adding more information just on that visual glance. You got a fry pan bottom breakout with a kicker signal. Okay, I think that's about all I got tonight. So what I'm going to be concentrating on is if everybody should learn their ABCs, which is the 12 major signals and the 6 or 8 patterns. Then we're going to go into, on March 2nd, we're going to be doing the top rank signals and patterns, which is ranking the signals and patterns in a quantitative order. Not that a best friend signal is great and number 18 is bad, they all work good. Some occur more often, some produce higher probabilities, higher profits. But when you look at all 18, there's going to be some that you say, oh, shoot, I can recognize that. I'm going to keep an eye on ticker signals. Instead of learning all 18, you want to start cultivating your own learning process down to where you're learning 4 or 5 extremely well. That way, you're always going to be trading off the knowledge you have versus shooting from the hip from somebody else's recommendation or a chart pattern that you know is good, but you don't know all the details to it. Yeah, always such a wonderful learning experience. Thanks, John. Can that be programmed on your meta stock? Jim, I think it's already programmed into meta stock if you're talking about the T-line. Or you can program it in. Anything that you see on any chart can be programmed in. There's always a menu you can go to add different criteria. I've kept this way past time, so if you want to do, Jim, go ahead and do the double line. Let's try to keep everybody to one pick so we can get out of here pretty quick. And Jim, do the next double line. UN needs to open positive, so you've got a bobble pattern setting up. USNA, that's a toughie. That's not a good-looking chart. Usually when they break down like this, you've got to give them time to start setting up again. If you're long, it has to open positive tomorrow to stay long. INSEE, another bobble breakout. It has to open positive tomorrow. If it opens lower, you close it out because it's stuck. And E-Corp, just stay long on this one as long as it stays above the T-line. Shopify, stay long, but you've got kind of a dark cloud. Make sure your safety stop is below the T-line. And OKTA, you can get ready to buy this one if it comes back up through today's high. See how they stayed above the T-line. If you're long, you can stay long on this as long as it stays above the T-line. Is the pattern a long 1 month fry-pan bottom? Yeah, it is. I don't know what the volume is on this, but it's not really doing too much of anything. So what you really need to see is something that is showing you exuberant or excessive buying, somewhat the same magnitude as what the selling did over here. And make sure your volume on these little penny stocks are huge, like millions of shares. Fate, another one that can be bought, but it's not a great chart. There's a trend channel. So if you're buying it on the basis it's just going back to the top of the trend channel. AKCA, Doji, get ready to buy on positive trading above the T-line. Because of all the dojis, number one. Number two, where's this all occurring? Right at the same place it bottomed out before. UTT, you just stay long. You can actually be a buyer of this one on positive trading tomorrow. JD.com, nothing wildly exciting. Let's see if there's this thing. Yeah, you do have kind of a fry pan bottom. You can buy this one on positive trading. Just don't let it come back and close below the T-line. Apple not really moving with any great resiliency. Today it had the opportunity to kind of clarify a J-hook pattern, but it didn't. If you're long, it has to stay above the T-line. I wouldn't be a buyer of it right here, though. None of the biggies are moving well. This one was a failure. When it got up here and hit the 200, you can see kind of the shooting star. Now you have a bearish engulfing. I would have closed it out. I would have used today or yesterday's low, Friday's low, as a stop, with the idea that if it came back down through there, where was it heading? Back to the T-line. Is that an island reversal? No, not really. An island reversal would mean it came all the way back down here and then gapped down below that gap. I'll see if I can find an island reversal. HRTX, very, very slow. You can see it's a very slow uptrend. So if I had my druthers, I would be someplace else. MDB, all you can do here is stay long. Use the T-line as your stop. OLED, notice the left-right combo bouncing off the T-line. Just simple. Stay long until you see a sell signal. Trading desk. Whoops. Bullish engulfing. J-hook pattern setup. If this opens positive tomorrow, you've got a bullish doji sandwich, meaning they're coming back up to test the recent highs. Schlumberger. Nothing here to get real excited about. If you were short, you would have covered your short today, but I wouldn't be going long until you see more confirmation. EXR, if you like, it's still not real intriguing. If you like it, you can be buying it on strength. You just want to make sure that it gets out through that little resistance level. Good QTT, right? You can be buying this one. Oh, Square. Square I meant to do. Square was a good situation because there's your left-right combo. There's your doji. If this opens positive tomorrow, you want to be buying immediately. That tells you your left-right combo confirming, doji sandwich, confirming a J-hook pattern. Same scenario on IOMN, bullish engulfing. This is what I call a stutter step. Notice this signal right here. Not really a signal. Pull back. Now, here's your signal, the bullish engulfing. Now you can be buying this one on positive trading, a doji sandwich. And eBay, just stay long, use the T-line as your stop. ConAgra, fry pan bottom, you can be buying this one on positive trading. It looks like you've got a little doji sandwich here, implying there's more upside, which means your first target more than likely will be up here at the 50-day moving average. Olex, this one is also a doji sandwich potential on a positive open. Left-right combo using the 34 as a resistance level or a support level. AMD, this one, I wouldn't be long or short. I'd be more apt to start buying if it came back up through the high of today, which was also the high of Friday, giving you kind of a doji sandwich setup. And Snap, stay long. Just watch to see what happens once you get up here to the 50-day, the 200-day moving average. HCS, Alex, is not coming up. And Cyber, there's your left-right combo. It backed off today. You still use the T-line as your stop. If I was going to be a buyer of this one, I'd wait for it to come back up through today's open and tomorrow's trading. That would tell me my J-hook pattern is in progress. HCSG. Nothing here. If you're short, you stay short. You're not quite in the oversold area. If you're short, put a safety stop just above today's high. Aren't stock buys more of a 50-50 instead of aren't stock buys more of a 50-50 instead of selling options? Aren't stock buys more of a 50-50? I don't understand that question. Starbucks. Repeat that question, John. Starbucks, you stay long. Got a doji up here. Use the T line as your stop. Under Armour, another one that could be set up as a doji sandwich. Positive open, breaking out through this downtrend, getting you ready for the next wave. Okay, they've got earnings tomorrow. All right. MLNX, just stay long. Etsy. Etsy, you need more confirmation. I wouldn't be long or short right now. You can see you've got a little scoop pattern setting up, but you need to see strength, meaning coming back up through the today's high. Fiber, earn Thursday, okay. Oh, do I act on the 3T? No, I just kind of use it as a confirming indicator. Chance of success. Buying stock. I would guess my success ratio is around 70%. Now that doesn't necessarily mean my buy may only be 0.3%, or it may be a 300%. But that comes back to the function of knowing that if 1/3 of my trades aren't going to work, when I recognize it and get out of it quickly, I don't have any emotions stuck in it. Yeah, and you should be much better than a 50-50 on a stock based upon identifying the signals. Okay, everybody. We're still in a slow uptrend. Definitely would like to see the Dow trade positive tomorrow, continuing this uptrend. But that, how often do I play the downside? Just as much as I play the upside. If I see the trend going this way, obviously I'm going to be much stronger on the long side. If I see that evening star signal, I'm going to be much heavier on the short side. Oh, I'm trying to think of any. I haven't thought of any good jokes. Bright Spear did a little dark cloud up here. Whoops, no, it didn't. There's your left-right combo. Stay long. We did Cody, right? Cody, gap up, look for a 45 degree. I think we did ILMN. Yeah, look for a doji sandwich, positive open. I can't think of any jokes right offhand, so you'll just have to wait till tomorrow. Oh, the only ones I can remember is what my Sandy's grandson told me is, why did the roll of toilet paper roll down the hill? It was trying to get to the bottom. Okay. That's what I always tell people about how obvious candlestick signals are. It's like a guy in a nudist camp saying, boy, would I like to see her in a tight sweater. All right, everybody. We'll see you bright and early in the chat room tomorrow. Oh, Don. See you then.